Hey folks, welcome back for another video. In this video, I will walk you through what I would do if I were a total novice wishing to begin trading from zero. Following 5 years of trading, losing money, and earning money in the financial markets, I will now walk you precisely what I would do if I were in your place right now. Most likely, if you use what I am going to give, the 5 years it took me will probably take you just 3 years, as you will have a clear-cut roadmap. Thus, pay close attention to this video till the very last, as I will be providing you a quite important roadmap. If you know nothing about trading and are a total novice, the most crucial thing to learn is the variety of markets that exist, the marketplaces you are free to trade in, and the financial markets accessible. Trading is an idea, a hobby one may engage in any kind of market. Finding the market you wish to trade in is thus the most important choice you have to make. Majorly today, there are 3 kinds of markets: the stock market, more especially, the crypto market, and the Forex market. You may trade and develop yourself as a trader in these 3 main marketplaces. In these 5 years, I spent the first 2 to 3 years trading in the stock market, then a couple of years in crypto markets, and for the past 2 to 3 years, I have completely traded in the Forex market. After 5 years, I can definitely tell you that if I were to start from zero today, I would head directly to the Forex market. The Forex market is constructed in a way that makes you lose money. The taxes are greater, the fees are higher, the brokerage is pricey, and there's no leverage. Basically, in this market, the chances are against you. Imagine if I wanted to build a business today, and I had 2 options: open a restaurant in a village, or open one in New York City. Where would the proper success be? Most possibly in New York, since the market is so huge that the possibilities of people visiting my restaurant are very, very great. But if I start a restaurant in a community with a population of just 20,000, even if all 20,000 people visit my restaurant, my development will be highly constrained. Whereas New York, with a population in the millions, provides endless potential and undiscovered chances. Similarly, the stock market is like operating a restaurant in a village, while the Forex market is like building one in a major city. That's why, if I were beginning today, I would jump right into the currency market. After picking the market you want to trade in, the next phase is choosing your trading platform and broker. What is a broker? A broker is simply a body, a firm, or an institution that assists your trading. For example, if I want to exchange gold today, I need to acquire gold. But someone has to sell me the gold, right? The broker fulfills this precise duty. The broker links the buyer and the vendor. The seller goes to the broker to sell the gold, and I go to the broker to buy the gold. The broker arranges this transaction and collects a fee from both the buyer and the seller. This is what a broker does. A broker plays a significant role in your trading trip, since if you don't select the correct broker, your journey might be longer. Let me clarify. Imagine I started trading in the Forex market today with $10,000, and I lost $5,000. Now, apart from this loss, I also lose $1,000 in brokerage fees and charges. This implies that instead of a $5,000 loss, my loss becomes $6,000. Now I need to recoup an extra 10%, which means I need to put in more work, and it will take longer to regain the deficit. This delays your journey and makes the period of losing money much longer. The second extremely significant issue is that a lot of brokers defraud clients. Many brokers disappear, while some participate in fraudulent operations that capture people's money. Even if you are the finest trader in the world, if your broker walks away with your money, nothing else will matter. That's why choosing a broker is really crucial. Make sure you do your research. Make sure you know about your broker, whether they are authorized, regulated, and legitimate. Setting up a broker is so easy, just make sure you are diligent in this step. The next phase is picking your trading platform. In the market, things are slightly different. You have to pick both a trading platform and a broker. Normally, many trading platforms are associated with brokers. At the back end, there's a broker facilitating your transaction. On the front end, there's your trading platform where you execute your transactions. So, picking a trading platform is very vital. Many brokers provide various trading platforms. Some of the greatest trading platforms include MetaTrader 5. This trading system is really good. I personally prefer MetaTrader 5. It's my favorite since making trades on it is straightforward and comprehending everything is easy. So initially, I settled on the market, picked the broker, and finished the trading platform. Now I am ready to exchange. But what I need now is a trading technique. To construct a trading strategy, I first need to study trading. If I'm studying trade, what things should I focus on, and what things should I not focus on? If you ask me now, after 6 years of experience in this market, what is the number one notion that genuinely counts apart from risk management? I'd answer that concept is liquidity. If you know where liquidity lies, you will know where the large players will move the market. The most crucial notion, in my opinion now, is liquidity. If you learn to read liquidity in charts, nothing else will truly matter. But of course, there are several important ideas you need to know: support and resistance, trend lines, chart patterns, and candlestick patterns. I personally think that chart patterns and candlestick patterns are not very relevant, but support and resistance and trend lines are critical to understand liquidity. Then liquidity itself depends on volume, strength, and velocity of the candles. All these technical features are very crucial for you to learn. Many people, when they start their trading adventure, ingest too much knowledge. They start reading extensively. I made this mistake too. I read a lot of books. But finally, at the end of the day, even if you study 100 things, you'll only employ 3 to 4 principles to trade profitably. So make sure you don't overburden yourself with knowledge. These are the 3 to 4 principles that I would personally acquire if I were to start again with the same knowledge and experience. Using these notions, I would design a trading strategy. I have previously prepared a thorough video on how to deal with stop loss and best secret trading strategy, and you'll find the link above. Another important thing. Let's pretend I'm dealing in the Forex market. In Forex, I'm trading gold, so the designated instrument is gold. Next is risk management. I'll specify how much danger I'm prepared to accept and how much profit I aspire for. Now, I have a plan, a broker, a trading platform, and reasonable understanding of how to interpret charts. What should I do next? I'll go to historical charts and test the approach I've devised. I'll try it on historical data to see whether it works or not. Because a lot of you come into this market with your hard-earned money for which you've worked really hard, done tasks for days, received insults from others. But you come into this market with your hard-earned money without understanding if your technique works or not. And that's simply absurd if you think about it. It's like learning to drive a car, but practicing on someone's brand new vehicle. So I'll try my method on past charts. I'll take the data and test the technique on the last year's data to discover whether this thing works or not. Once I have the data and understand it, I'll examine the outcomes. If the data is well and good, then I'll start trading. But if the data is awful, and I find that my win rate is really low or my risk-to-reward ratio is poor, I'll improvise and enhance the method. How will I enhance it? I'll write down the days I incur the highest losses and avoid trading on those days. I'll evaluate why precisely I'm losing on certain days, what exactly is occurring on the chart. What setup is creating that is causing me to lose. I'll avoid those configurations. I'll write down which time windows or hours result in the highest losses and avoid trading during those hours. By removing these elements, my victory rate will naturally improve. Always remember, if your win rate is 80% in backtesting, it will somewhat decline in actual markets, maybe down to 60, because of course real market conditions are different. In the live market, numerous unpredictable factors come into play. Therefore, make sure that when you are ready with your technique after backtesting, your success rate should be around 80%. This manner, even if it declines by 20, it will still be 60%. After I'm done with backtesting, I will finally deploy my method in the live market. And to throw a cherry on the cake, let's say I am a total rookie and have no experience on how to punch orders or conduct transactions. I will download MetaTrader 5, set up a demo account, and trade on the trial account. I will practice my method once more because I already have back-tested outcomes. After that, I will eventually buy a prop firm challenge or register an account with a Forex broker. And that is how I will start my trading experience. I hope this provides you clarity. I hope this provides you a sense of exactly what a trading trip should look like and what elements need to be addressed. I have attempted to convey this to you in very basic words. And even if you are not a total novice, I hope you discovered the missing piece to your puzzle, the missing piece to your journey. I hope this helps. See you in the next one. Thank you.